Hello, everybody, and welcome to Betweenplays Stock Market Strategies. Today, we have with us Chase Edgelow from EverGen Infrastructure Corp. So, Chase, it's been a while, man, and it's pretty cool. EverGen has been making strides. It's a really cool story, and you're in the renewable space. But you know what? I'd like for you to be able to explain that. You know, we have a lot of new people on the show that are listening to it. So, for all the new people out there, I'd like to start back at scratch and
Sure.
basically, for all of the viewers that are discovering Evergen for the first time, can you just give us an overview of the company?
Sure. We founded EverGen in 2020
Yeah.
with a goal to build an infrastructure platform, not unlike some of the great publicly listed Canadian wind and solar businesses that were built on 20-year offtake agreements with the power utilities.
Yeah.
Our goal was to do the same thing, building renewable natural gas infrastructure
Yeah.
tied to 20-year offtake agreements with Canadian gas utilities. And these offtake agreements have been signed at $30 a gigajoule plus, so we're getting a significant green premium that
Okay.
makes our projects economic. And our view is that we're a builder, an owner, and an operator of these facilities,
Okay.
and that will create the strongest platform nationally over time. And I think we're ahead of the curve right now relative to other businesses in the space. We've got three offtakes with Fortis BC and one with Irving, a refiner in the East Coast.
Okay.
And these are all contracts that give us steady, reoccurring cash flow.
So, can you explain what RNG actually is, renewable natural gas, and
Sure.
basically why is governments and industries actually so interested in this?
Yeah, so renewable natural gas is effectively captured methane from the decomposition of organic waste. So our business, we operate in the intersection of organic waste management. So
Okay.
think of your green bin behind your house
Yes.
or restaurant food waste or
Yeah.
pre-consumer food waste.
Okay.
All of that, if it ends up in landfill, produces a lot of methane as it decomposes.
Yes.
Effectively, the gas that we produce through our traditional Canadian oil and gas industry has come from organics that were buried deep in the ground. We're just accelerating that process on the surface with the facilities that we build. So we build digesters as that food waste decomposes, as those organics decompose, we
Okay.
capture the methane coming off the top of our
Okay.
digesters and we upgrade it to pipeline spec. So effectively, we're stripping out the impurities, stripping out CO2, and we're selling it directly into the grid. So we're grid connected local facilities in two in Abbotsford, one in Pemberton, just north of Whistler,
Okay.
and a facility south of Calgary in Lethbridge, or to the east of Lethbridge today.
So what I find is interesting about your story versus a lot of the people that come on the show over here is that you actually have something that is running. It's not like a lot of the guys that get on here, there's whether it's in the pharmaceutical space and it's like, okay, well, we have to, like, we need money so that way we can try to figure something out, or in the mining industry, it could take 10, 15, 20 years before we see anything, or in technology where they're building the next big thing. You actually have something that's working. You have infrastructure.
Yeah, we've put about $80 million into the ground, and our enterprise value is sub $30 million today. So I think, if we look at the value of the assets that we've constructed, there's a significant arbitrage right now in the market. I think the infrastructure that we build with 20-year offtake contracts from the gas utilities is there and here to stay, and it gives us a cost advantage over time to continue to expand those facilities. When we look at projects, I guess growing our platform,
Yeah.
building across Canada, we've got a $150 million project approximately in Ontario called Project Radius. It's much like those mining development projects that you talk about. There's been we've been at that for 3 or 4 years, but we're nearing our final investment decision on that project. So there's an element of similarities to what you're describing, but
Yeah,
what we really like about what we built is that we have executed and we do have cash flow from our existing assets that will allow us to continue to expand.
that's pretty cool. Just so that way, again, focusing on the company and how this is created, where do you get the waste? I mean, where does that come from?
Yeah, we've got a great overview slide in our deck, but effectively there's three sources of organic waste. One source is your green bin waste.
Oh,
That green bin waste typically goes to a transfer station. A
okay,
local hauler will pick it up, take it to the municipal transfer station, and then we contract with the municipalities to process that aggregated green bin waste. So we'll actually get paid a tip fee.
okay.
We'll get paid, north of $100 a ton, depending on where you are, up to $150 a ton to take that waste in. So we're getting paid to process their organics. And then the back end infrastructure, we're effectively commingling that residential food waste, food and garden waste with commercial food waste and agricultural waste. So manure as well is a key component for a lot of digester projects. So we commingle all of that material in a large tank of over the span of 30 days. Effectively, all of the organic material that's going to break down does, and it generates methane as it breaks down. We capture that methane at the top of that tank, and then we put it through a gas upgrading skid. So it's relatively simple infrastructure. It's been around and in use for over 100 years, different forms of what we do. And in Europe, this is how they process all of their organics. What we like about where we are operating right now is, there's probably 100 digesters across Canada,
Okay.
plus that I would call similar to the types of projects that we build.
Okay.
When we look at the municipally focused projects, there's only a handful. So as we progress over time, we're going to see more and more of these facilities built. This is the evolution of landfilling organics, and then we move to composting organics, and then we move to a higher value end use where we're capturing a gas rather than just composting.
So, Chase, your Q4 2025 results and operational momentum. Let's go into that a little bit now. For the adjusted EBITDA, improved dramatically in your Q4. All right. So I'm going to go off the numbers over here. So I'm going to refer to a paper I got in front of me, rising from approximately 98,000 to 1.3 million. How important is it operating discipline and cost control of the phase of EverGen's evolution?
Yeah, it's critical. That's what we set out to do. I think our mindset is we want to operate EverGen as disciplined as a private equity owner of this type of infrastructure would.
Okay.
And so what that means to us is we went through a recapitalization transaction in May of last year. As you mentioned, the Q4 EBITDA in 2024 was around $100,000. So
Yeah.
call it $400,000 annualized run rate. We're now coming out of a Q4 where our annualized run rate EBITDA is closer to $5 million. And
Okay.
that really paints a picture of the turnaround activities and the impact that they've had on the business. So
Yeah, that's quite
I
incredible.
think I think that's been critical for us. It takes the company from a cash flow negative to a cash flow positive situation,
Yeah.
and we're just getting started. So we went through this recapitalization transaction in May.
Yeah.
Those Q4 results are really early in our efforts.
Okay. How critical was that recapitalization for you guys? Like,
Yeah, so we have gone through a lot of growing pains as a public company. We IPO'd in 2021
okay.
in a market where the the ability to build RNG projects was impacted by there was a whole bunch of capital in 2021 chasing clean energy.
That's true.
And
Yeah.
what's changed as so what that, I guess what that did is it left scarcity of projects, scarcity of people, increased capital costs. And so with all of that, I learned a lot of lessons. I ended up stepping away from EverGen as CEO in September 2023.
Okay.
And um, as a founder of the business, never took my eye off the company.
Of
And
course.
so stepped back in May of 2025 with alongside a ultra high net worth family office that invested $5 million. So really underpinned our balance sheet, which was
Okay.
critical and
Yeah.
allowed us to take the time and do the things operationally that would turn the company around. So the things that resulted in that run rate EBITDA improvement that you describe.
So naturally, I remember in 2020, 2021, I was part of a few groups. I can't remember who they are now because time is just going by so fast. But yeah, the clean energy sector, especially, I remember this one company we're following, but I think it was an Italian guy that was the CEO of it. But yeah, and it was pretty interesting because they were talking about, taking waste, putting inside. There was like a pressure system or something like that. And then it creates, fuel and stuff. And
Yep.
anyways, the guy was going to like China to go get pieces that were not working on it and whatever. Anyways, but the point is that there was a lot of companies that did come out during that time, and people were, and I think still are, very interested in that because we're sort of moving away, or we're not really replacing, but we're minimizing the impact on Earth. We're taking something that's there, that's decomposing over years. You're pretty much helping the planet in what you're doing, and I think that a lot of people are extremely interested in that kind of technology. I just think that there was something that happened in 2021. Retail investors were going crazy; they're all over the place. So I'm feeling that there's a balance coming now, whether it's clean energy, renewables, and all other stuff. It seems like there was a balancing act that happened. One side too much, the other side too much, and now we're sort of like people are going, "Hey, wait a minute! I remember the value of that. I like that, so I'm going to reinvest in something that I like instead of going for hype."
Mm-hmm.
I think that's very interesting. But on that note, when we look at macro, because when you look at that, basically we're seeing the growing like geopolitical and energy security concerns globally. Okay, so do you believe that localized renewable infrastructure like RNG facilities will become increasingly important for, let's just say, the national energy resilience? Because that's basically what it gets back into.
Yep. Yeah, no, I think we are lucky in Canada to operate in a country where we have more energy than we use. We're a net exporter of energy.
True.
I think, that's one of the reasons that, we've really focused at EverGen on taking Canadian oil and gas expertise. I started my career in the energy space. Our COO, Ron Green, has been in the energy and energy services space his whole career. And, both he and I separately, probably 10 years ago, ended up getting more and more involved in, larger scale energy transition projects or projects that involved maybe doing things that were thought of as uneconomic in previous years where conditions had changed.
Yeah.
And these things really start to make sense. And I think for us, the things that we start with for that are one, can you get an offtake agreement? Is someone willing to lock in for 20 years at a price?
Yeah.
And
Sure.
there was a lot of exuberance in 2021 with things like hydrogen, and there was no market. Nobody was locking into 20-year contracts for hydrogen.
Yeah.
As in contrast, FortisBC has been providing 20-year offtake agreements into the RNG space for almost a decade now. Our facility, Fraser Valley Biogas, was the first grid-connected methane capture or RNG facility in North America on the back of a Fortis offtake agreement. So I think there's the offtake side of it. There's the feedstock side of it. So we're getting paid to take waste. We're solving a waste problem that needs to be solved anyway. So sort of outside of energy demand, I think there's a real obvious win-win for capturing energy from waste. And then third, and maybe the most important to your comment on what's changed since 2021 in the market,
Yeah.
is proven technology.
Yeah.
So, I put hydrogen in that same bucket. There was a lot of R&D work that still needed to be done to make hydrogen economic. We're using equipment, a lot of it out of Europe, that has been operating for 50 years in a market where they've had an offtake agreement. We're not taking technology risk in any of our projects, and that's something that I like.
Yeah, that's really cool. Yeah, I completely agree with that. And basically, Chase, what message would you like to leave investors and shareholders following, let's say, this operational turnaround and your record RNG production?
I think that this is EverGen 2.0. We've stabilized the financial position of the company.
Yeah.
Clearly night and day since this time last year. The company's had $7 million invested in it at 60 cents a share.
Oh,
Because of tax loss selling, a lot of our shareholders being long only institutions that don't trade. We've
yeah.
got about over 70% of our shareholder base that's management, board, or pension and larger long only institutions that hold our shares, and
Yeah.
those shares don't trade. For that reason, I think we're trading at a discount even to the 60-cent financing that we did in January. So
Okay.
it's a real opportunity for those that are paying attention.
Okay.
We're building a platform. We're recognized by the gas utilities as a strong operator. We've not only stabilized the base on our financial position, but operationally, we've been able to achieve 97% uptime at our facilities, which, I think when the gas utilities look at what's in their portfolio, where they're getting RNG from, it would be very hard for them to find other facilities that have the operational track record that we've been able to, bring in with the expertise and the discipline that comes from the Canadian oil and gas sector, applying it to this, call it energy transition sector that was traditionally occupied by smaller technology firms and farm-owned assets. So really bringing in that institutional focus. So we're building a platform. We have, I think, a very strong organic growth opportunity within our existing portfolio.
Yeah.
We see over $50 million of near-term potential optimization and expansion at our core facilities.
Okay.
We then have Project Radius, which I mentioned before. It's a $150 million project in Ontario
That's right.
that we believe will bring in third-party funding for and should have some news on in the near future. And then I think being recognized as a strong operator is giving us the ability to consolidate other opportunities in the space, so a roll-up strategy. And I think all of those three things combined give us a tremendous amount of platform value that sits above our current operations and our current asset, and allow us to really attract capital into a space that there's few and far between opportunities to invest in platforms like ours.
Well, absolutely. And you guys got the stuff going on. I'm really what I'd like to do with you, Chase, is have you back on the show as soon as possible, actually, so that way, if you have your investors deck, that we can show how how this facility runs and all that kind of stuff, because it'd be very interesting, actually. I'll put a link down below in the description to your website, but I'd like to have you on there, and we have it, we show it up at the same time as we're talking.
That sounds great. We could even go for a virtual site tour of our
Oh,
Fraser Valley biogas facility if you'd like.
yeah, I'd love to do that. Yeah, virtual tour, absolutely. I'm sure that people like to see it too. So, Chase, thank you so much for being here. Let's do that really soon, though. All right, and thanks for being on Between Plays, and we're gonna see you soon.
Thanks for having me. It's great to reconnect, and I look forward to it.
All right, cool. See you, Chase.
See ya.
Between Plays. It's the journey and what you do between where you are and where you want to be. Research, prepare, plan, and execute your strategy. Do your DD and stay strong in visualizing and achieving your goals. Our strategy is unique since 2020. An original concept imitated, never duplicated. Real conversations with media influencers, educational and expert speakers, analysts and consultants. Between Plays, bridging the gap between companies and investors.